Hello and welcome to the weekly market metrics. I'm your host Sandeep Rao and we are in week 26 of 2026. Well, the Strait of Hormuz has opened and oil wasted no time in taking the elevator down. As I speak, Brent crude is at its lowest since before the war, around $73 a barrel, nearly 39% off from the $120 peak. So for India, the key thing is the rupee. We import close to 85% of our crude oil, so when oil drops this hard, the current account improves and the rupee gets stronger. Dollar rupee is currently at around 94 right now. But the monsoon is a separate concern. The deficit has widened to 43% nationally. The advance stalled near Mumbai, and both the Indian Meteorological Department and the US National Oceanic and Atmospheric Administration are flagging a moderate to strong El Niño this year. Central India is at 63% deficit. If July and August don't deliver, Kharif crops, that is the summer-sown staples like rice, pulses and oilseeds, will feel it. And the food inflation could be of concern to RBI at some point. And if you follow the startup ecosystem, you could not have missed Kunal Shah being named the global head of WhatsApp. Founders stepping out to run someone else's company is rare, but with Kunal, the predictable move was never on the table. There is a short Rain Matter conversation with him and Dinesh Pai that just dropped a few weeks back, possibly his last on record as Cred's founder and CEO. Link is in the show notes. Over to the markets. Well, the market did reflect the general positive backdrop and Nifty is up roughly 0.2% for the week, trading at around 2450 as of Thursday's close. This was a short week on eve of Muharram. With that, let's look at what happened last week and what could happen in the coming week. Let's start with the rate of change across indexes. Well, not much has changed this week, which is exactly what you'd expect after last week's rally. Nifty 50 ended up almost flat, just about 0.2%, while Nifty Bank continued to inch higher with a gain of 0.9%. One exception was Nifty Mid-Select, which corrected 1.3% after being one of the strongest performers over the last few weeks. Even then, it remains up nearly 19% over the last 3 months and close to 5% for the year. The broader takeaway hasn't really changed. Nifty Bank continues to be one of the strongest large-cap indexes, while Nifty 50 still remains down almost 8% for the year. One quiet week doesn't really change the trend. Overall, if you look at the YTD numbers, not much seems to have changed. Microcap 250 continues to lead the pack at 10.5%, followed by Small Cap 250 at 6.2%. Next 50 is up 3.6%, while Mid Cap 150 has eased to 1.7%. Our dear Nifty 50 meanwhile remains the clear laggard at -8%. The past week hasn't really changed the broader picture. 2026 continues to reward investors willing to move beyond the headline index. Now let's look at Nifty on various time frames, starting with the weekly time frame. It was a truncated week with just 4 days. Nifty gained just about 43 points of 0.2% to close at 24,056. It continues to trade above both the 10-week and the 20-week SMAs, holding on to last week's breakout. Nifty is currently hovering around the 24,000 mark. Last week's breakout has held, but there still isn't enough evidence to say that the index has decisively moved higher. For now, 24,000 remains a level to watch, while 24,600 continues to be the next major resistance. Even in a relatively low VIX environment, Nifty's average daily range rose to 242 points this week from 149 points last week, reminding us that low VIX doesn't always mean small intraday ranges. The daily ranges tell the story as well. Monday had the quietest session at just 95 points. Tuesday and Wednesday recorded the widest ranges of the week at 351 and 301 points, while Thursday was still fairly active with a 223-point range. Let's now look at Nifty on the daily time frame. On the daily chart, Nifty had a volatile but largely directionless week. After a weak Monday, Tuesday saw a sharp sell-off, while Wednesday and Thursday recovered most of those losses. The recovery, however, stalled near 24,200 with Nifty unable to close above it. Nifty eventually ended the week almost flat, but more importantly continued to hold above the 24,000 mark. In week 26, Nifty continues to hold above both the 21 EMA and the 50 EMA. It briefly touched the 100-day EMA this week but couldn't close above it. The classic 200-day SMA is around 24,900 and it remains the next major hurdle over it. On the hourly time frame, Nifty largely stayed above the 50 EMA this week. Tuesday's sell-off briefly broke that structure, but Wednesday's recovery quickly reversed it. Thursday saw a move to fresh weekly highs before some profit booking into the close, bringing the price closer to the EMA. Overall, the hourly trend continues to remain positive. Talking about the Nifty weekly expiry, which happened on Tuesday, June 23rd, the at-the-money straddle opened at around 90 points and steadily decayed to nearly 57 points by around 11:30 am. But the sharp afternoon sell-off, which pushed Nifty into a 351-point daily range, saw the straddle briefly spike back to around 108 points before theta took over again into the close. Overall, realized volatility ended up much higher than the opening straddle had implied, making it a much harder expiry for non-directional option sellers. Buyers, on the other hand, must have had a good day. Let me know in the comments how your expiry went. Moving on to what to expect in the coming week. The 24,000 level continues to be the key support for Nifty. Just below that, the 23,800 to 23,650 gap zone remains an important support area if the market sees a deeper pullback. On the upside, 24,200 has once again proved to be a hurdle. A decisive close above it could open the door for a move towards 24,600, which continues to be the next major resistance. The overall bias remains bullish to sideways. As long as Nifty holds about 24,000, the benefit of doubt stays with the bulls. If you look at the straddle premiums to gauge the expected range for the upcoming monthly expiries scheduled on Tuesday, June 30th, the Nifty at-the-money straddle closed at 212 points, up slightly from 192 points last week, implying an expected move of roughly 0.88% on either side. That gives us an expected range of 24,262 on the upside and 23,838 on the downside. Despite India VIX remaining below 13, the options market is pricing in slightly wider move than last week, most likely reflecting the monthly expiry. Moving on to India VIX, almost unchanged this week, closing at 13.05 after briefly dipping below 13 last week. Even though VIX remains near the lowest levels we've seen in 2026, this week's price action was a reminder that low VIX doesn't necessarily mean low intraday ranges. Moving on to the sectoral indexes for the week. The leadership narrowed quite a bit this week. Nifty Pharma took the top spot at 2.1% gains, followed by Realty at 1.8% and Auto at 1.5%. Financials also made a comeback, with FinService and Bank rounding out the top 5. Unlike last week when leadership was broad-based, this week saw a more modest gains across sectors, with no sector returning more than 2.1%. It'll be interesting to see if pharma can sustain this momentum over the coming weeks. If you look at the more specific Tijori Indexes this week, QSR is at top, up about 4.7%. It's a sector that has had a difficult year with concerns around weak demand, rising input costs and pressures on earning. So this week's move looks more like a relief rally than a sign that the fundamentals have completely turned for this sector. Hospitality is a similar story. The sector has faced many of the same headwinds as QSR, and this week's gain appeared to be more of a bounce than a structural shift. General insurance is up as well, but I'd view that as a continuation of the NSE IPO related re-rating we discussed last week rather than a fresh news. What caught my attention this week though was transformers and refractories appearing together. You see, transformers, the industrial kind, not the ones that show up in movies, are a critical part of India's power infrastructure. Every time we expand the grid or add renewable capacity, more transformers are needed. At the heart of most transformer cores is a material called cold rolled grain oriented electric steel or CRGO, most of which India imports. Refractories, on the other hand, are heat resistant materials used to line steel furnaces. They are an essential consumable in steel manufacturing. The link between the two came this week. On June 23rd, the Directorate General of Trade Remedies initiated an anti-dumping investigation into imports of CRGO electric steel and amorphous metals from China, Japan, Korea and Russia following a complaint by JSW JFE Electrical Steel. If the investigation eventually results in anti-dumping duties, it could encourage greater domestic production of transformer-grade electrical steel, which may also benefit upstream industries such as refractories. Whether this week's move in these two Tijori indexes was driven by this news alone is difficult to say. Markets rarely move for a single reason, but the timing is certainly interesting and it's one development worth keeping an eye on. That's pretty much it on the sectoral front this week. Moving on to commodities, well, on the daily time frame, both gold M and silver M continue to remain under pressure. Gold M is trading around 1,39,700, well below its 50 EMA at 1,52,700. After last week's weakness, the price extended their decline further before seeing a small bounce on Thursday. But for now, the trend firmly remains bearish. Silver M tells a very similar story, currently trading at around 2,23,200, significantly below its 50 EMA at 2,59,700. Like gold, it has seen a small rebound after a sharp fall, but it is still well below its moving average. Both precious metals continue to trade below the 50 EMAs, and until they reclaim those levels, the broader trend remains weak. Moving on to the weekly time frame, well, it was another weak week for most commodities. Crude oil led the pack by falling 8.8%, followed by silver, which dropped 7.2%, copper lost 5.3%, while gold declined 3.9%. The only commodity that managed to end the week in green was natural gas, gaining 3.1%. Despite the recent correction, natural gas remains the standout performer for 2026 with gains over 156%, while crude oil is still up nearly 43% for the year. That's pretty much it for commodities this week. In summary, the markets took a breather after last week's rally, with Nifty ending almost unchanged but comfortably holding above the 24,000 mark. India VIX remained anchored to near 13, although the sharp swings on Tuesday and Wednesday were a clear reminder that low VIX doesn't always mean low intraday volatility. The broader market story remains intact. Microcap 250 continues to lead the pack in 2026, while Nifty 50 is still the clear laggard, down around 8% for the year. Nifty Bank continues to quietly outperform among the large cap indexes. On the sectoral front, leadership has narrowed this week, with pharma, realty and auto leading the gains. Among the Tijori indexes, the anti-dumping probe into transformer-grade electric steel made transformers and refractories two interesting sectors to keep an eye on. Commodities remain under pressure for another week. Crude oil, gold, silver and copper all declined, while natural gas was the lone bright spot and continues to be the best performing commodity of 2026. The bottom line, well, the market continues to consolidate about 24,000. The broader trend remains bullish to sideways, but a decisive move above 24,200 is still needed to signal the next leg higher. Moving on to what caught my attention this week, well, given that there's a long weekend coming, here are two long-form listens worth saving for it. The first is Emily Chang's extended interview with Anthropic CEO Dario Amodei on the circuit at Bloomberg Originals. It covers a lot of his San Francisco roots, leaving OpenAI, the Pentagon standoff, but the part I kept thinking about was the Mythos section. Mythos is Anthropic's most advanced model, one they deliberately held back from public release because it could autonomously navigate cyber kill chains. It means the model can independently plan and execute a cyber attack from start to finish. He claims they took a commercial hit to patch vulnerabilities first. There's also a section on civilizational collapse risk, and Amodei puts it at 10 to 25%, which sounds alarming, but as with any predictions about the future, it's always better to take it with a spoonful of salt. All in all, it was still worth the full hour. The second is the latest acquired episode on the Walt Disney Company. Both Ben and David go deep into Walt's era. It's the story of how a man who went bankrupt twice and lost his first hit character to a distributor ended up building an empire by turning Mickey Mouse into an unstoppable money-making machine. If you ever wondered how Disney became Disney, this is the one. Long as acquired always is, but worth every minute. Links are in the show notes. Now over to the events to factor in for the coming week. Looking ahead, we are back to a full 5-day trading week. Tuesday, June 30th marks the NSE monthly expiry for Nifty, Bank Nifty, Midcap Nifty and other NSE index derivatives, after which we roll into the July series. As of now, there are no known major macro events on the calendar unless something unexpected pops up. Now, one interesting thing I noticed while checking the holiday calendar is that there isn't a single market holiday in July or August apart from the regular weekends. While as much as I enjoy a long weekend, I don't mind an uninterrupted 5-day trading week either. Let me know in the comments, what do you prefer? That's it for the week, and with that, we wrap up this week's weekly market metrics. If you find this series useful, don't forget to subscribe to the channel, and yes, do share it with your friends. Until then, stay curious, stay steady and enjoy your long weekend.